Well, hello, Maverick traders. January 16th, Joe with you here on a Tuesday, coming out of the Martin Luther King holiday. Hopefully, you guys had a good, long weekend and enjoyed some pretty fun football. I'm going to tell you, there's some pretty good games on. I've got my 2 cents on the markets. Let's share it. Take responsibility for the outcome. I'm going to see if there's any sort of news we could talk about, although there really wasn't coming out of the holiday. Technical analysis on any major indices, which they didn't do much, so it's not going to be much change from the weekend. But I do have some trades to look at, so make sure you take responsibility for them.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the markets, not much change. A lot of the technical indicators kind of stayed the same. A little bit of a slip. Let's jump into it. Daily news here. The market slipped a little coming out of the holiday, and I'm not sure if that's just more of a continuation of some profit taking. But the levels do continue to hold. I'm not going to change my outlook from last week. Nothing really told me to. And it is optimistic. It is a sentiment that's glass half full as we move into our first, or I should say, fourth quarter's earnings season, and the first options expiration of 2024. I don't know what that's going to bring. Well, what do we do today? Down 0.62% in the Dow, the S&P down just over 0.25%, and the Q's basically flat. The Russells have been super tumultuous, especially over the last few months, down 2.32, but I've seen that number up and down about that much. It seems just to be the new Qs, right? The new technical, the new technology area, but we'll see. Oil and gold both slid a little bit, about 1%. So coming out of the weekend, I saw this as just, hey, let's just a general sell-off. I did see one piece of maybe could be negative news. We'll talk about it here in a second, economic-wise, but I don't want to look too deep into it. Especially since we are still in these nice technical patterns. I'll show you in a minute. Advanced decline line, 77% declining, 20% advancing, 3 just hanging out. Above and below the 50-day moving average. That I've seen that as high as 80-20 over the last little bit, and it's starting to slide. So some of those stocks I do believe are experiencing some selling, maybe some profit taking, but I don't think it's enough to really change the sector. They are pretty selective. And I'll show you this in the heat map. Things kind of bounce around. But before that, let's jump into the charts. Here's the SPY, or I should say our Spiders chart. Yep, and let's get my line out, because what I liked about this is it's got this double top going on, but it's actually a little bit higher from where it pivoted last time towards the end of 2024. Nice little pivot point set just below the 20-day moving average, and has this wonderful ascending triangle pattern. Even though today slipped a little bit with a little bit of a gap, it did finish above that 20-day. And even if it stays within this range, let me just go ahead and get a little bit of box here. If we stay in this range through the earnings season, I'm still going to keep this definitely +3, +2 for the month. Week to week, yeah, that could change maybe as it goes a little lower, maybe be 0, or just be cautious if it's going to pull back or consolidate. But past that, nothing's changed for me as we go forward here. So let's get into the Qs. This one's very similar, but it's got a little bit, it's not as strong as the SPY because it dropped a little bit. It still has this really nice ascending actually almost a symmetrical triangle, and it did finish above the 20-day moving average. This is definitely a +2, +3, and I'm going to give it the same ideal. So if it makes it through earnings season, and since it is tech heavy here, the Qs, it's got a little bit wider of a range. But if it can stay above that 50, and more importantly, maybe above that 396, this area here, the bottom of this box, then I'm going to stay pretty positive, at least for the next little bit. Now, I said I'd talk about the heat map here, and I've seen a couple things as of late, and but what's cool there, it's specific to individual stocks. Let me get a different color here. And like NVIDIA really didn't participate in that rally towards the end of the year, and it had some profit taking, went sideways, and it's just kind of taken off since then. But then there's some constants, and this is energy. This is one that is just continued to get beaten down, expected lower demand, and this is almost kind of a precursor of expectations of a slowing economy. and it hasn't really deviated from just sideways to down, down, sideways to down. Small bounces here and there, but still underperforming. Other than that, most sectors are kind of hard to gauge here, and I'm not going to put too much into it until we get through that earnings season and actually see any sort of sentiment grab onto them and move them one way or the other. So surprise, surprise, didn't change, right? I'm at a +3. I was a +2 last week. I'm going to go +3 here, just to be kind of on the same page of what Maverick is, and on top of which, just seeing that spider. Once again, see if I can draw a line on the smaller chart. I didn't really notice it, but that actually is slipping a little higher. So I bumped it up there, showing a little bit of outperformance there, +1 for the week. If we go sideways, the more we consolidate sideways, I might bump that to a +2 for the week, expecting things to break out. So if that's my outlook, then obviously I'm going to be leaning to adding more trades to which side? That's right, the bull side. However, I found a whole bunch to the bear side. So I don't want you guys to abandon some cool bearish opportunities, especially in anything in energy. There's a couple out there that are great. I've got them down here. ExxonMobil was from Friday's class. It's great. APA is one I had up here last week. COP is what we're going to look at today, but these things are just drifting lower. On the bull side, still from last week, I carried Energy, Peak, HST. Energy looks like a pretty good pullback stack still. It didn't really confirm yet, so I'm waiting on that, but I did like VRT. So let's start there. This is VRT, and I like to see patterns that mimic the overall markets and their sectors. If I can't get the overall or the sector right now, then I'm fine with just following along with the market. Here is that double top. Here's that really long ascending triangle pattern. I'd slow play this anywhere from 50 to 55, 50 to 52 and a half. Diagonalize this would be great. Once again, let me say this. If I haven't said it, I haven't checked earnings on these, and I've already been caught in a couple of trades so far that do have earnings. So check earnings. We're in earnings season, but I do like the pattern. Let's move over to our bear here, and this is COP, and shocker, it is in the what sector? That's right, energy, oil and gas. So it did break today. It broke pretty hard. I'd like to see more volume. I did like the fact that this broke a support level today on a pretty good sized candle. However, we really didn't get too much volume associated with it. So it's more of just, oh geez, let's just let this fall, and it slipped. So I would expect maybe a hesitation or a bounce here, but this is definitely underperforming. And if this is a chart that you want to give a day or two before you jump into it, it's fine. We did see a candle like this at the top, and this was above both averages. This bearish engulfing candle really played its hand out, and the volume was relatively low. So I'd imagine it might slide here, kind of sideways to down, maybe credit. Don't get too aggressive on the direction of the bear, and it's obvious. Why? Well, it's because these markets are not bearish. They're still bullish. So one day is hard for me to make trades or really come to any sort of definitive answer, but I do like carrying it from last week, which is no change here. So there's some selling in individual stocks. I think it's still the continuation of profit taking. I think this will take pretty much at least through earnings season, or at least into the first expiration cycle, which is Friday. But we are still seeing. I'm still seeing some of this this weakness move some of these stocks, or I should say, some of this profit taking moving these stocks lower. Earnings season will be the next kind of real catalyst for any sort of directional change, or even getting up enough energy to break to the upside. So that will probably be the biggest sentiment change. We'll see what happens with options expiration as well. Follow support and resistance in the overall markets first. This is a true top-down approach. It's fun to chase some of these individual stocks because they do continue to go strong or weak, but I'm not seeing a lot of follow-through in the sentiment of the sectors, and it's really difficult to do something bearish when you have the sectors kind of sideways to up, and you've got the markets up, and then you've got this bear trade in that sector. So I'm just going to wait for all of my ducks to get in a row first. Manufacturing took a big drop today. That might have been a little bit of the kick that made things slide down. 43.7, the lowest rating since 2020. Is that a precursor of something? Is that just because it's the first one that happened in 2024? I have no idea. So I'm just going to chalk that up to interesting, but not going to cause any panic for now. Retail sales coming up, import price index. We have some housing numbers and jobless as well. So we'll see if we have that combined with some earnings this week, if anything changes. So it is earnings season. As always, check your potential trades, as I don't sometimes. It's just, it's frustrating, but hey, it happens to all of us. But as a reminder, just make sure you do so. All right, folks, thanks for joining me, and we look forward to next time. Talk to you later. Bye, everybody.